If you want to be a profitable trader who actually makes money, the first thing you need is a profitable strategy that has been tested and proven to work in the live markets. Now, in this video, I'm going to walk you through my full strategy, step by step. I'm going to take you from step 1 all the way to step 4. Then I'm even going to give you a bonus and I'm going to teach you how to manage your risk, okay? Now, what you can see here on my screen is the trade that I'm actually going to walk you through. But first, before I walk you through this trade, right, let me take you over the full strategy. Let me show you how to use this strategy step by step so that you have a clear understanding for when I take you over to the live markets. So step 1, directional bias. Now, why directional bias? Okay, it's quite simple, right? Your directional bias is going to show you what way the markets are going in. Now, that's basically, if you think about it, right? If you want to be on the right side of the markets, if you want to be able to make money from the markets, the first thing that you actually need to be able to do is you need to be able to know where price is likely to be heading. Now, you're not always going to be right with this, but you need something that gives you an edge in knowing when the price is going to go up or when price is going to go down. So how do we do this? Well, the first way we do this is directional bias. So as you can see here on my screen, right, this is a simple version of directional bias. So let's just mark it how it is. For the simple version, it is going to be our swing structure. So how would you mark this out? Simple. We have a low, then we have a high, okay? Then we have a retracement, and we have a higher low put in place. Now, why is this a higher low? Very simple. It's because it's higher than the previous low, okay? Then you can see price has a push, and we actually break this high, giving a break of structure. Then we put in a new high once price starts to pull back again. What does this new high become? It becomes a higher high. Why? Because it's higher than the previous high, okay? So far, we know that we're putting higher highs and higher lows, okay? So we know that price is bullish. So our directional bias at this moment in time is bullish. Then you can see we have a pullback again and we have a reversal. Price now puts in a new low because we take this high. Now remember this, right? One of the most important things is in this situation, we are trading at this moment in time in between this low and this high. So we cannot confirm that this is the new swing low until this high has been taken. It's that simple because price could come like this, okay? Come down, come up a little bit, come down even more. Therefore, this then would no longer be the swing low, right? Because price is here. Then it could reverse and take the high. Then this would become the swing low. And this would just be internal structure. Right now, we're working on swing structure because we're looking at our directional bias. So we know now that this is the new swing low because it's broke this high. This is a break of structure again. Then what do we want to look for? We want to look for price to start pulling back again. Now you can see price now has started to pull back. So this puts in a new high. So far we have our low, high, higher low, higher high, higher low, and a higher high. Now, this time, when price pulls back, we actually break the low. So when we break this low, this is what we call a change of character. Now, why is it called a change of character? Because it is a change in trend. We've just gone from bullish to bearish, okay? So now we know price has shifted bearish. Now, what do we expect to happen because price has shifted bearish? Well, because we're reading our directional bias, we know that price has gone from bullish to bearish. Now we expect more lows to be put in place. We expect price to continue trading to the downside. So where does our weak point come? Our weak point in this situation now, once we've broke here and had this change of character, all right, this is the change of character, we then need to look for a pullback, okay? So I have set rules for a pullback. So I know once price has pulled back a certain amount of candles, that is classed as a pullback. So then I could put this as my new swing low and we could have a pullback. And then what I'm looking for now, once we've had this pullback, is either a break of the high or a break of the low. Because these are our two swing points. But because we're bearish, my guess is that we will take the low. So what do we do? What happens? We have a pullback somewhere into this leg. Then price puts in a lower high. Why is it a lower high? Because it's lower than the previous high, okay? It's that simple. It's a lower high because it's lower than the previous high. And then trades off, breaking the low, giving us a break of structure to the downside, okay? That's how it works, okay? This is reading your directional bias. Now, what I would do, I'll quickly take you to the market so I can explain this there. This will be a break of structure. Why is it a break of structure and not a change of character? Because we're not changing trend. We're continuing the trend. So it's just a break of structure. We already changed trend. We already went from bullish to bearish. That's why this was a change of character. This next break is just a break of structure. And then let me just quickly mark this out before I go back, okay? So we've gone from our lower low to a lower high, to a lower low, to a lower high, to a lower low. Now, where is the next swing point? Like, what is the swing point here? Is it this or is it this? If you think it is, then unfortunately you are wrong, okay? It isn't. Why is that? Because we know this is our swing high and we know this is our swing low. So what is the range that we're trading within? We're trading within this low, we're trading within this high, okay? Now, an easy way to understand whether you've actually broke out of your range, is by using something I call the box method. Now you can go from the high to the low and you can drag it across. Now you can either break out of the top of the box or the bottom of the box. Anything inside of the box is something that we call internal structure, but that's something I'll get into on another video. Okay, look out for the video on market structure because I'll be releasing that soon. In this situation, we broke out to the top of the box. So that means if you guessed change of character, you was correct. That means we had a change of character from here. Now what's this change of character? This is telling us that price has now gone from bearish again to bullish. So we've gone from bullish to bearish to bullish, okay? So now I expect price to start putting in a series of higher highs and higher lows. It's that simple, guys. That is directional bias. And this is how you have the edge on understanding where price is likely to head. Now let me take you and show you this on the live markets so that you can understand what it looks like for real. So now what we have here is the position that I took, right? But before all this, we had to gather our directional bias, right? For me to even take this short, I had to make sure that we was bearish on the 50-minute time frame. So right now we're on the 50-minute time frame. And what I'll do is I'll walk you through the structure that I marked up to figure out that we was actually bearish. And I'll explain how a lot of people get this wrong and could have possibly been on the wrong side of the markets. Let's look at this piece of price, right? Now, this piece of price could look very confusing for a lot of people, and they would not understand what side of the market to be on. Now, a lot of people could see this here as a low, this is a high, this is a higher low, this is a higher high, and this could start looking for longs, okay? And unfortunately, if you was a person that was looking for longs here, you could have either got tagged in here and actually had a profitable trade and been lucky, or you could have tried to hold it and you would have actually got wrecked here. You could have thought, okay, let's look again. We've had a shift here, you know, okay, I just got wrecked in this trade, cool. We've had a new low put in place. We've had a lower high, we've had a lower low, then we've had a higher high put in place. Okay, now I'm bullish again. Let's actually start looking for buys, okay, because we've gone bullish. Let me look for buys somewhere in here. And you would have absolutely got wrecked. Now, this is where a lot of people get this wrong, because the problem is we never had a bullish directional bias at all in this piece of price. We actually had a bearish directional bias. So let me explain that to you. Let's just go from here, right? This is a very obvious high. This then had a pullback and then had a reversal, push to the upside, causing a break structure. So we know this is our high, we know this is our low. So this is our swing high, okay? Let me mark this out. This is our swing high. We can just write it as a swing high for now. And this is our swing low, okay? So right now, swing structure is from this high to this low. So we need to either break out of the high or break out of the low to put in a new swing high or a new swing low. It's that simple. Now what you can see is we actually broke to the upside. Now it's very important that you know that you can only have an actual break if the candle closes. If it's a wick, for instance, like this is not a break to the downside, okay? It's just a liquidation. It's just a wick. There has to be a candle close for it to actually be valid. So what do we have here? Well, you know, we had our swing high, we had our swing low, then we've had a break to the upside. So this is a break of structure. We was already bullish, okay? We're just following a bullish trend right now. We're actually bullish. We're not bearish. So it's a break of structure, okay? Then you can see that this is the new high that was put in. Then we had a pullback. Now, with the rules that I have, I know that this is a valid pullback, okay? So we had a pullback. Where's the lowest point in this pullback before we broke the high again? The lowest point is here. Then we broke the high. Okay, so I know that after this second break of structure here, that this becomes the new swing low. So now we're trading within this low and this new high. Okay, this becomes our new swing high. So at this point, because we're bullish, all you should be looking for is longs, right? Now, what actually happens in this situation? Well, we actually have a pullback and we break this low. So now we've shifted from bullish to bearish, okay? This is a change of character. Why? Because we've gone from bullish to bearish. So this is a change in trend. It's a change of character. Then what actually happens is you can see price pulls to the downside, liquidates these lows, and then has a push to the upside. And we have another change of character. Now, it happens quite often, you know? It does happen quite often that sometimes you will get a change of character to the downside, liquidating the lows, and then we will continue the bullish trend and we'll have another change of character to the upside. So we just gone from bullish to bearish to bullish, okay? Now, here's the thing, right? My system, when I said you could be looking for buys here, I would never be looking for buys in this position, right? Because as my strategy is a sweep of liquidity, I cannot take buys in this area if we haven't swept London lows or swept Asia's lows, right? So I wouldn't even be looking for buys. Now, when we did actually sweep the lows, we'd already changed character to the downside. So we went bearish. So now I couldn't even look for longs. So now what I would need to see, because we've gone bearish, is I'll need to see a sweep of the highs. And that doesn't happen because the next Asia and London opens here on the next day. So there will be no trades in there for me. So even though market structure went against me, my system wouldn't allow me to take a position there. But anyway, let's just carry on, right? So we actually had a change of character to the upside again. Where's the highest point after this change of character? Well, that is here, okay? So we know now that this, because of the pullback, I know that this is a pullback based on how many candles there are. Because this is a pullback, I now know I have a new swing high. So this becomes my swing high, okay? Now, where is the swing low? Where do you think the swing low is? Well, it's going to be the lowest point before we had the change of character. So if we know the change of character is here, where is the lowest point before the change of character? It's here. That's correct. So now, where are we trading within? Well, I know that this is my swing low, this is my swing low, and I know that this is my swing high. So I know that this is the range that I'm trading in. So anything within here is an internal structure, right? So right now, I know that the trend is actually bullish because we had our change of character to the upside, and we're trading within this swing low and this swing high. So what you want to do is we can use the box method to make it easy to understand. Take from the low to the high, drag that across. Now what you see here is something that confuses a lot of people, okay? And like I said, if we were to put in a new swing low to confirm a new swing structural leg, we have to have a candle close. We cannot have a wick. So what actually happens here is where some people start changing, they'll start putting in new structural lows, is we have a wick of the swing low, okay? Now, that is just a liquidation. We are still right now bullish. We haven't had a close to confirm that price is shifting from bullish to bearish, okay? So in this situation, we're still looking for longs. Now, if you remember what I said, for me, you can't take longs anyway unless we have a sweep of Asia, right? And you can see here, we haven't swept Asia, okay? So we can't even be looking for longs there yet. Now, what do we want to happen next? Well, we want to look at the box and we want to see when does price actually break out of it. Now, if you drag it across, you'll see that price actually breaks out of this box right here, and it breaks out of the bottom of the box. So what does that mean? That means we've just gone from bullish to bearish. We've had a new change of character. Now let's remove this box because we've had a new change of character. A change of character to the downside. We've gone from bullish to bearish. So right now, what do we have? We have a 15-minute directional bias, and that bias is bearish. So we want to be looking for shorts in this situation. Now you can see from here, we had a pullback. I know that this is a valid pullback because of how many candles are there. So where's the new swing low? Well, the swing low is the lowest point after the break. Okay, that's had the pullback, and that is right here. So this becomes our new swing low. Now where are we trading within? We are trading within this swing low and this swing high. So price is able to pull all the way back up to here, and then reverse if it wants to, and come all the way back down. And all of this inside of here would be internal structure, okay? But what actually happens? We have a pullback, okay? And because I'm bearish, I know that I'm looking for shorts, right? So let's just leave that there for now. And we're going to come back to it. Let's go over the next part of the strategy. Right now, we've gone over directional bias, okay? We've gone over how to read a directional bias. We've just showed you how to do that. If you didn't quite understand it, make sure you take notes, go back, listen to it again, because this really will help you in terms of understanding the markets. But now let's move to step 2. So here we are on step 2. Now step 2 was a liquidity sweep. Now what is a liquidity sweep? Well, there's many terms for liquidity sweeps, right? You could have a sweep of a low, you could have a sweep of a trend line, etc. There's many ways that you can have essentially have a liquidity sweep. But for my system and what I do, you have to have a sweep of either Asia or London. In this situation, in the trade that I took here, it was a sweep of London. So how does that work? Very simple. You can go to your indicator tool and you can get up a sessions indicator, and you just have to make sure that you have the right times. Now we use the first 3 hours of London, okay? And that is UTC -5, which is New York time zone. That is 2 a.m. is the open, and 5 a.m. is the close. Or it could literally be the lowest point where it opened, and it could be the highest point where it opened and the lowest point where it closed. It just depends on whether we're bullish or bearish, right? Let's just look at this, right? How would this work if I was looking for a sweep? If I have a 15-minute directional bias that is bearish, which we do in this situation, what do we want? We want a sweep of the high, okay? We want to sweep the high before we look for our confirmation. So what is that? It's very simple, right? Your blue box will be on your screen, just like this. I'll show you because it's on here. So you can see here, my session indicator is on, right? We're bearish in this example. We're following a series of lower lows and lower highs. Okay, now you can see my blue box, that is Asia. You can see my green box, that is London. Green box is 2 a.m. till 5 a.m. Now, how do I know if we've had a sweep of that box? Very simple. Take the high of the box, like this, drag it across, and if we've swept the high of that box, that is what we call the liquidity sweep, okay? So now the liquidity sweep's happened, and that has set me up ready to start looking for my confirmation on a lower time frame. It's that simple, right? At the high of every one of these boxes is liquidity. At the low of every one of these boxes is liquidity. We can either sweep it to the upside or sweep it to the downside. If we're looking for longs, meaning we're buying the market, we need a sweep to the downside. If we're looking for shorts, meaning we're selling the market, we need a sweep to the upside. Okay. Now, if we're bearish, we're selling. Okay. If we're bullish, we're longing, we're buying. Okay. It's that simple. In this situation, in this trade that I took, we're on a 50-minute bearish trend. We've had a sweep of London high. Then we need to understand how to read the 1-minute bias. So this is where we go into a little bit more of advanced directional bias. The red that I have here is the 1-minute structure, and the black that I have here is the 50-minute. So we just went over the 50-minute, right? Because of what we just went over, we know that this is a low, this is a high, this is a higher low, this is a higher high, this is a higher low, this is a higher high, and this is a lower low. Why? Because we broke this, right? We know that this is a change of character because we took the swing low out. So we just went on the 50-minute time frame from bullish to bearish. We're now bearish, right? Then we need to jump into the 1-minute and we need to be able to look for our confirmation. So what does that look like? Same on the 1-minute time frame. We need to see our high, a higher low, higher high, higher low, higher high, higher low, higher high, change of character from here. Remember, right now we're just reading the directional bias. Okay, let me remove that, make it a little bit cleaner. Change of character on the 1-minute time frame. All right, then we continued internally. Remember, it's this high to this low. So we have to break this high, we'll break this low. Then we broke this high again. Okay, meaning we had to change of character again. Then we had a new high put in place. We had a higher low, because it's higher than the last low. We had a high high, and we had to change of character again, right, from here. Now, why is this more advanced? Well, think about this, right? It's a little bit fractal. If you have the 15-minute structure that is showing us we've gone from bullish to bearish, meaning we're now in a bearish trend, and then you have the 1-minute that has also pulled back and then shifted bearish, what does that tell us? Well, the 1-minute's now giving us a clue that price is likely shifted and ready to put in a new low, meaning that we're about to respect the 15-minute directional bias and trade towards the low of the 15-minute. So it gives us an idea. It realigns price with the 15-minute directional bias that we have. So what can we do in this situation? Well, if we have the full setup lined up, meaning we've had a sweep of liquidity, then we've had a confirmation on the 1-minute time frame. Well, now what we need to do is look for a POI, a point of interest, to actually take our position from. Okay, and then we take the position and we look to trade toward the low. So this is more advanced directional bias. You know, you have your 50-minute directional bias, and then you have your 1-minute directional bias realigning you with the 15-minute. Okay, so now we've gone over advanced. Now, how would that look? That would look like from here, going to the 1-minute time frame and reading the market structure that's inside of here that we then use to get our confirmation and take our entry from. So what I will do is I will walk you through that in a moment. And it looks a little bit like this, you know? Let me just pull this out so it's a little bit larger. In fact, it looks exactly like this, right? This is an overview of what the actual strategy would look like. First, you need your 50-minute directional bias. What do we have? Well, we have that directional bias. We've shifted here, change of character, and we're now bearish. So the 50-minute bias is bearish. So I know that I'm looking for shorts because we're bearish. Then I come down to the 1-minute. And then I look at the 1-minute. I wait for the 1-minute to then shift. You know, we have our pullback. You know, there's 1-minute structure. There's a lot of 1-minute structure in these 15-minute legs. You know, we have our price. We have a pullback. And push the downside again. We have then a little bit of a pullback. Then what do we want to look for? We want to look for the sweep of liquidity. So we wait for London to open. We know that London's opened here, right? We're bearish on the 15-minute. So we want to have a sweep to the upside. So we wait for that to play out. We have our sweep to the upside, meaning we've now got our 50-minute directional bias. We've got our liquidity sweep. Then we need to look for the 1-minute confirmation. The 1-minute confirmation is a change of character to the downside, realigning the 1-minute with the 15-minute. So now, in this situation, we've swept to the upside. We've then had a change of character. Now we're 15-minute bearish. We've had our liquidity sweep to the upside on London, and we've got our 1-minute confirmation. Now we need to look for our point of interest. Okay. Now for me, in this situation, my point of interest was a inverted fair value gap. Then what do? You market your inverted fair value gap. You take your entry from the start. You make sure you're covering the high. And then you target the low. Then what I'll do is let me just walk you through exactly how to understand what the inverted fair value gap is. And then I'm going to take you through the full trade on the live market so that you have a full understanding of how this works. So what is an inverted fair value gap? Now, you might know what a fair value gap is, but you might not understand what an inverted fair value gap is. So a fair value gap simply is an imbalance in price. You know, it's where buyers and sellers don't meet, right? We have 3 candles. The easiest way to know how to mark this up is 3 candles, right? And there needs to be a gap between the high of the one candle and the low of the other candle. If there's a gap, that means there's an imbalance in price. Okay. Now that can either be in the low of the, let's go through it, right? This is a fair value gap. It's where there's an imbalance in price, where the high of the wick on the first candle does not meet the low of the wick on the third candle. Okay. It means there's a gap in here. Now inverted means that price has then gone and traded through that. And then what you do is you drag this across and you'd look to take your position from the inverted fair value gap. Now let's just have a look at what that looks like. So if I just zoom in here, right, let's just look for fair value gaps. So you can see a fair value gap immediately, and you can see that it's been respected. So we have 3 candles, 1, 2, 3. Now we have the low of the first candle, and then we have the high of the third candle. Do they meet? No, they don't. So that means that this is a fair value gap, okay? And you can see price traded straight to this fair value gap, tapped into it, and then continued to the downside. Now you can look for these anywhere. Let me show you what it looks like when there is no fair value gap. So 3 candles. The high of this candle, the first candle, literally trades into the third candle, meaning there's no gap in here. Okay, now let's look at this one. 1, 2, 3. 3 candles. The high of this candle, does it meet the third candle? No, it doesn't. So that is a fair value gap again. Now this is an inverted fair value gap. Why is it inverted? Because price is traded through it, okay? Price is traded through this fair value gap, so it's now an inverted fair value gap. Another fair value gap. 1, 2, 3. The high of this candle, does it meet? No, it doesn't meet the low of the third candle, meaning there's a fair value gap. What is it? Inverted. Why? Because price is traded through it. This wouldn't be an inverted fair value gap if price hadn't traded through it, okay? So that's fair value gaps. Now I need to look for one of those after my confirmation to get into my position and take an entry, okay? So let's actually run through this. Let's take it back. So what do we have? We've already gone through it, right? We know that the trend right now is bearish, so that we're looking for shorts. We know that we need a sweep of London's high, right? And we look to target these lows. Why are we targeting these lows again? Why? Is because we're bearish, right? We expect these lows to go. We do not expect them to hold, okay? This is the weakest point. This is a weak low right now. And this is a strong high. Why is this strong? Because we expect it to hold because we're bearish. We expect this high to hold. Now, what do we do for our strategy? We've got our directional bias. We now need our liquidity sweep. So what do we want to sweep? We want to sweep this high. So let's say we're on the 1 minute time frame. What are we looking for? We're looking for a sweep of this high. We move to the 5 minute to make this a little bit faster. Okay. London's closed, 2 a.m. So 5 a.m. London's now closed. So we look for the sweep of the high. New York is now opened, which is what we're trading. We're waiting. No setup has showed itself yet because we haven't had a sweep of liquidity. Boom. What have we had? We've had a sweep of London, right? So what is that? Okay, that's our liquidity sweep. So directional bias is bearish. Our liquidity sweep to the upside. Now what do we want to look for? Well, we want to look for confirmation. So how does that work? Well, confirmation is a change of character now on the 1 minute time frame. Okay, so let's mark that up. I know this is a low. Okay, this is a high. Prices then pull back. This is the lowest point before then we broke this high. Okay, so it's the lowest point before we broke the high. This is a break of structure. Now, where are we trading within? Well, we know this is our low, so now we need to look for our next swing point before we have a pullback, right? So we broke to the upside, break of structure. Now, where do we pull back? We pull back from here. Now, based on the rules that I have, I know this is a valid pullback. So this is a new swing low, a swing high, sorry. Now we're trading within this low and this high until one of these gets broken. Now, what happens? Price pulls back a little bit and then breaks straight to the upside again. So this is another break of structure. We're continuing the bullish trend so far on the 1 minute. So we cannot look for entries yet. Why can we not look for entries yet? Because we need confirmation on the 1 minute and we need it to realign with the bearish trend. So we need 1 minute to flip from bullish to bearish, okay, for us to have the confirmation. So we're waiting for that to play out. Let's just play it out. And there it is. What is that? That's the swing low, remember. So what has happened? If you know that this was a swing high, we pulled back, put in a swing low, broke to the upside, put in a new swing high. We know that the range we're in right now for the change of character to happen is from this low to this high. So once we break out the low of this box, we have a change of character. So we've just gone from bullish on the 1 minute to bearish. So we've got our 15-minute directional bias. We've got our liquidity sweep. We've had our confirmation. Now we look for the point of interest. Now, if you remember what I said about fair value gaps, where is the inverted fair value gap on here? Now, if it's inverted, it has to have been traded through. So where is it? Where's the 3 candles? 1, 2, 3. It's here. What? First candle from the high to the third candle to the low. Okay. So the first candle and the third candle do not meet here, meaning we had a fair value gap. Price has then traded through this fair value gap, causing a change of character. And now we have an inverted fair value gap. So what am I looking to do? I'm looking to take my entry from here, covering the high. And where am I looking to target? I'm looking to target the swing low, okay? Because that's the weak low. Now, what does that give us? That gives us 4R. That gives us 1 to 4, right? But risk management, remember I said I was going to give you a bonus, risk management. For this system, for the data I have, through trading it live, I know that it's most profitable if you only target a minimum of 5 to R, meaning you cannot take this unless it is 1 to 5. So what do I do in this situation? All I do is I drag the position and I move my take profit below the low. I expect price to trade through this anyway, okay? I move it below the low and I target 1 to 5. So now I'd let this play out. And another bonus for this is, once I start playing this out, is the moment this low goes, I'm going to move to break even anyway and take all the risk off the table. So there's no even risk going to be left on this position once this low goes. So let's play it out and see what happens. We know now, before I play it out right, we know that with bearish on the 50 minutes, we've got a directional bias. We know we've had a liquidity sweep to the upside. We've swept London. We know we've had a 1 minute confirmation. And we know we've got a point of interest. So we're ready to take the trade, okay? We wouldn't take the trade if all of those do not align. So we took the trade, and then we could just play it out. Let's move it to like, play it out fast. Well, let me go back to it. I don't want to be there all day. And as you can see, trade comes up, taps straight into the inverted fair value gap, right? Then what do? Remember this. Once we break this low here, the low that was put in place before we hit the fair value gap, we go to break even. So at this point, we are break even. It's that simple. Now, from here onwards, all the risk is off the table. So you'd move it like this. There's no risk on the table right now. And now we're looking at just trading until price hits our take profit with the risk off the table. And that's it. It's that simple, guys. Now take this full strategy. Go test it yourself. Let me know in the comments what you want to see next. There will be a market structure video coming.